What's going on, everybody? Should we call today Volcano Day? Welcome, everybody. Welcome to We Talk Money. I'm your host, Chris Dunn. I'm here with Nikki and Travis.
What up?
What's up?
And man, we have got a packed show today. We've got so many tabs open that I don't even know how I'm going to navigate this, but we're going to figure it out.
Yeah, we'll get through it.
I love this this image, though. The volcano exploding, holding up the Bitcoin coin.
Is that Mordor?
Good question.
Ominous.
Yeah, man, so much to talk about. Such an exciting time. Obviously, everybody's really excited today, and Travis volunteered to play the evil devil's advocate on a lot of things today, which is good. You know, obviously, we like to get excited and look at positive developments, but we also want to stay pragmatic and look at the risks of certain things and not get ahead of ourselves.
Are we sure we want to do that, or should we just YOLO?
Let's just YOLO. Let's just moonboy it. How's it going, everybody? Welcome. If you're here live, thanks for joining. If you are watching after the fact or listening to the podcast, thank you guys as well. Let's just go ahead and jump right into it.
Awesome.
Bitcoin is up about 10% today for no particular reason at all. No, some huge news. This is, I feel like, a very, very positive development. It is official. El Salvador's legislator voted to adopt Bitcoin as legal tender. This seemed to have come out of almost nowhere and just happened very, very, very quickly. There was a big, what do you call the Twitter, what is it, Twitter Spaces?
Yep.
Yeah, there was last night the president of El Salvador was on talking about how they made it happen so quick and everything that happened. And I don't know, what do you guys make of this? I'm excited, but you know, obviously it's just the first step in what I think is going to be a lot of change. But what do you guys think?
Yeah, I think that's right. I think it's the first step, or the first, you know, the snowball is just rolling down the hill. We've talked about this for a long time in terms of countries that don't have their own sovereign currency.
Right.
They always seem to us to be a good candidate for early adopters of Bitcoin as either, some sort of like monetary policy or truly like a currency. But there's some things that we need to clarify too, because the US dollar, which is El Salvador's official currency, will remain legal tender for El Salvador.
Yes.
So I think a lot of people were mistaken when they thought that what El Salvador did here was that they were replacing the dollar with Bitcoin. It's actually going to be a dual system. So they're going to allow Bitcoin as legal tender, and they're going to allow the US dollar will remain legal tender as well.
Yeah.
Which is important because, the GDP per capita in El Salvador is like just over $4,000. And median income is also, I think, around $4,000 per citizen per year. So, Bitcoin, as we've talked about, today as it stands, is not necessarily like the most efficient currency out there in terms of, fees, time for transaction settlement. So I think it makes sense for them to slow play this where they have the dollar still as a legal tender and Bitcoin while they work on scaling through Lightning and things like that and fixing some of these issues.
Absolutely. Yeah. It's definitely early in the whole, actually, it's the very beginning in the whole government acceptance as legal tender, right? And there's so many implications for this, right? Like it's going to impact capital gains or no capital gains tax, right?
That's huge.
The other thing that's interesting, if I read this correctly, if I understand this correctly, it's merchants are going to be required to accept Bitcoin if somebody wants to pay with Bitcoin. So this is obviously going to cause some problems for people. It's going to cause a learning curve. It'll be really interesting a year, 2, 3 years from now to see what the adoption actually is and what the volume compared to dollars in El Salvador actually is. But yeah, it seems like a step in the right direction. And I do think it's important to point out that this is a country, like you said, Trav, that doesn't have their own sovereign currency. They still rely on the dollar. And some people brush this off as a non-event because of that fact. But I think that is, again, baby steps, right? Like you got to start somewhere. So this to me is like definitely a step in the right direction. Granted, it's not like, the EU or the US saying, okay, we're going to accept Bitcoin as our national currency or whatever, but it is a step in that direction.
It's a huge deal. It's a huge deal. And for the region, we've already seen now, I think the president in Paraguay was also intimating that potentially they could be moving towards legalizing Bitcoin as legal tender. And then you've got countries like Argentina or, countries that really not only do they've had problems obviously over time, many problems with their monetary system and with, taking out loans in other currencies and having to use the dollar, which, created problems for them in all sorts of ways. And so those countries in Central and South America that have long had issues with using the dollar as a main either peg or as, loans denominated in dollars, those countries are going to take a hard look and they're going to look at what El Salvador's done here and use that experience to inform potentially what they're going to do in the next 10 years.
Are you guys familiar with Strike?
Yes.
Yeah. So I guess that's who's going to be helping them facilitate this process so that all of their residents or their citizens can use Bitcoin as payment and avoid the volatility, because that was a big objection, that a lot of people were saying, oh, well, Bitcoin's super volatile. How are they going to deal with you being able to buy your coffee with Bitcoin?
Yeah.
And I guess they're working on a BitPay. Is it a BitPay of sorts? Is that kind of how it works, where it's instantly converting and allowing you to avoid that volatility, or how?
It's not so much for the volatility. It's more so for just speed and cost.
Okay.
So the Lightning Network has been in development for quite a while, and it's had its criticisms, but it's actually working today. And so we're going to start hopefully seeing a better use case as Bitcoin for currency, right? Because it's mostly been, you could argue it's money, obviously, but as far as like currency, day-to-day transactions, it hasn't really made sense to buy coffee with it, right?
Right.
And that's where, all the competitors come out and everybody's scrambling for this gold rush. And Bitcoin obviously has the advantage, first mover advantage, network effect, all that. But Lightning Network is making serious strides in that direction of just making it more feasible as a currency.
And allowing this to even happen in the first place.
And that is important because, like I said earlier, with the low GDP per capita and median income in El Salvador, you've got to get fees down for if you want Bitcoin to be used in day-to-day transactions. You've got to get those fees down.
Yeah.
So that's really important. There's some really interesting aspects to this too. El Salvador is they're still trying to get a loan from the IMF for about $1 billion. And some people were saying that this is going to hurt their ability to get a loan from the IMF. And I don't know what's going to happen with that. But again, they're still going to have the US dollar as legal tender. So I think that could be a non-issue. But what is interesting to think about is, on the one hand, some people are worried that it might hurt their chances to get an IMF loan. I actually think this could help attract a lot of private foreign investment into the country, showing that you're on the forefront of technology and that you're willing to take some risks and do some interesting adoption of different currency paradigms. Like, I think, we've already seen, I think, like, maybe it's not worth mentioning, but like Justin Tron or whatever his name is, Justin Sun, the Tron guy, he said he's going to establish an office there. Maybe they don't need people like him, but or people, of that nature, but they're going to be seriously looked at, I think. And, I think the president is obviously very forward thinking. He's a younger guy. He's already done a lot of interesting reforms in the country. So could this be another step towards getting private foreign investment to offset any need for IMF loans and things like that?
It's giving the people another option. I was reading that a lot of people in El Salvador, they transact in cash. They don't, have credit, and they send money home, or they send money to other, to families in other places. And this is giving them that optionality to be able to do that more efficiently. And they're unbanked, they're unbanked. Yeah. And giving them that ability.
Payment remittances is a huge market in Central and South America. Yep. I think it was like 2016. I was down in Panama with some of the Dash people, and one thing that we would go out to dinners and stuff, and we would meet a lot of like the waitresses and bar staff, and we'd ask them like, where are you from? What do you do? And it was like almost half the people we talked to would be sending money home somewhere, Venezuela, Colombia,
absolutely,
something like that. And like we asked them to like give us numbers, like how much are you losing to fees and what's the speed? And it was just back then, and probably still today, it's just so bad, right? And so there's all these use cases for Bitcoin and crypto in places where, like Argentina, with high inflation and all the problems they've had for decades, to the situation in Venezuela, and on and on and on. And that's why, so Balaji just tweeted this out yesterday. He said, these are the Latin American leaders backing crypto. These are the countries and the people that are driving crypto adoption in Central and South America, right? So obviously El Salvador, first mover, Paraguay, Panama, Argentina, Brazil, Colombia, Mexico. The dominoes are falling, and you're going to see people that are like, well, I didn't want to be first, but we don't want to be last either.
What's interesting is these are emerging markets, and will people there be more encouraged now to purchase Bitcoin? Bitcoin is an asset. Bitcoin has historically appreciated a lot and generated a lot of wealth for people in the US, Europe, Asia, whatever. Is this going to encourage them to have that opportunity to build wealth by saying, oh yeah, I can transact in Bitcoin. I need this in my life, not only for my everyday life, but it's also me having something that could appreciate and build wealth for me,
right.
And I think that is an interesting aspect in these emerging markets that, a lot of people are still struggling and a lot of people are still in poverty. And I don't know. I think that's an interesting part of it.
That's a great point, Nikki, because, we, over the past, 7 or 8 years, I've talked to so many people from Venezuela and places that have been in really scary situations that are like, look, I rolled the dice. I put all my money from bolivars into Bitcoin or whatever. And instead of being basically broke and destitute, I'm now wealthy, and I've been able to literally save the lives of my friends and family.
Yeah, it almost feels like a flywheel. The government support it. the people get it,
Yeah.
they use it, they hold it, and then they generate wealth.
Yep. And we're so like spoiled in the West, right? We have access to banking services like credit cards and bank accounts and the stock market, right? Like we can invest in companies. Places like in certain parts of Asia and Central and South America and Africa, they don't have access to that. And so when governments offer this as a solution, it helps in so many different ways. And it's easy. Again, in the media, it's been really interesting over the past day or two to watch people just basically shit all over this and say, "Oh, look at the crime in El Salvador. Look at their economy. It's so small. Look at this." It's there's always going to be haters, and when you're early in something, it looks like a far stretch to make meaningful impact, but I think this is going to make life-saving impact pretty quickly.
Now, devil's advocate here.
Yep.
There is risk, obviously, that Bitcoin could enter a prolonged bear cycle.
Yep.
And then you could have the opposite effect, at least in the short run, right? So,
Absolutely.
I know the media has focused a lot on that potential risk. How do you think about that in this context?
Yeah, I mean, people still need to realize if they're going to either buy or earn Bitcoin, they need to realize that it's super volatile, and they need to watch my videos from 8 years ago where I talk about market cycles, you know? Like I've been beating the same drum for so long, and even traders can't understand that. So your average person who's just trying to make a living by selling something at a local market, yeah, that they're going to understand volatility. But, you know, the other economies like Argentina and Venezuela, places that are used to losing value of their own currency anyway, aren't going to balk at, you know, some of the volatility. So, and stable coins, I mean, they can actually learn how to use the whole ecosystem of crypto and not just purely hold Bitcoin, right?
Yeah.
They can hold, you know, USDT or USDC or, you know, a mixture, a basket, Ethereum, right? They're just going to get in the ecosystem, and it's going to help them in many ways. But I agree, like people do need to be aware of the fact that, yeah, prices can crash.
But you made some really good points there. And I think to double down on what you said, you know, the countries that don't have their own sovereign currency, that are depending on, you know, the US dollar and monetary policy in the US, why wouldn't you have at least one other, you know, potential currency backstop, right? Like, why wouldn't you have another legal tender that you could lean on if, say, you know, U.S. deficits get out of control and you know, the dollar starts to depreciate at a faster rate?
Yeah.
Why wouldn't you want a second legal tender? So from that aspect, it's almost like they're diversifying in a way, which I think is smart. And there's going to be some challenges, like you said earlier, with merchants. And I think there are some carve-outs, at least for some period of time. I read some summaries of the bill, and it did say that some merchants who don't have the ability to immediately accept Bitcoin won't be penalized. There'll be a transition period there. But I mean, I think this. I don't know how you could look at this overall and say that this isn't overall a net positive.
Yeah.
I mean, I can definitely take some issues with, like, you know, some of the risks, but I think overall, like from the overall perspective, again, I see it as a net positive.
I think another huge net positive is this. So the president just was tweeting today about, for anybody listening to the podcast, if you can't read this, he says, "I've just instructed the president of our state-owned geothermal electric company to put up a plan to offer facilities for Bitcoin mining with very cheap, 100% clean, 100% renewable, zero emissions energy from our volcanoes."
That
sounds awesome.
How fast did that narrative shift from Elon's dumbass saying, "Oh man, Bitcoin's bad for the environment," to, okay, well, you can go complain in your corner, Elon. Meanwhile, people over here are actually innovating and figuring out a way to mine with volcanic energy. I think is so damn cool.
The memes are going to be wild from here on out. I mean, the Bitcoin
Mount
volcano
Doom.
memes.
Look at this power. I don't know anything about volcano power, but that looks like a lot of power shooting out of this thing.
Volcanoes are fierce.
Yeah, no, there's a lot of geothermal and hydro energy in El Salvador. I believe, at least among the Central American countries, they have the highest concentration of geothermal and hydro. So
yeah,
they also use a lot of fuel oil, I believe, but I think like half of their energy generation right now is renewable. It's like geothermal or hydro. So yeah, I guess I don't know how much excess capacity they have to mine Bitcoin, but this could also be a game changer for them if they're able to effectively use some of their excess power generating capacity to essentially
get super wealthy.
Yeah, I mean, think about like countries like Norway that that have oil wealth. I mean, you could make a similar. I mean, over a long enough time frame here, if they can mine enough cryptocurrency that has value, they could be sitting on a sovereign wealth fund in 10 or 20 years.
That is so interesting.
Yeah, I mean, look at what happened in Norway, right? Like, what do they have? Over $1 trillion in their sovereign wealth fund?
Yeah.
But split between, 5 million people? So,
Yeah.
Imagine if something like that happens, right? I look at this like a trade on countries. Like, you look at a country like El Salvador that obviously has its issues with crime and, a low per capita GDP. And then it takes a leader like this, somebody young that's willing to step out of the shackles of old boomer thinking and think about the future and how to secure prosperity for his citizens. And then you have countries like China, which are like
shuttling their people.
Yeah, like there. So there was another article today. I can find it somewhere in here. We'll find it later. But basically, I've always said like countries that try to ban or severely restrict Bitcoin, all they're doing is stealing the prosperity of their future citizens. Like, it's not really helping anybody, right? They're probably doing it because they're scared and they want to maintain control. But at the end of the day, it's not really improving the lives of anybody. So I don't know. I'm just super bullish on El Salvador and any country that takes this kind of action.
Yeah.
Of course you are.
Yeah, of course I have to be.
and Jay in chat mentioned something that I think has been mentioned quite a bit this week is that some skeptics are saying, what percentage of people there are actually going to adopt it and start using it, and it may not actually catch on a lot, and that's certainly possible. Like, it'll be interesting to watch, but I think like we just mentioned, there are use cases outside of just it being used as a transactional currency, right? With the potential for the government to use the excess power to mine it.
Yeah.
There's, that thought leadership, like we talked about before, the forward-thinking government actions that they're taking could attract foreign direct investment, things like that. So there's all these other secondary effects that I think are worth thinking about. Just, it's not just will the citizens use it for individual transactions, because the answer probably to that is not a lot at first.
Right. It's going to be slow. Yeah. And that's where education comes in. That's where the Lightning Network is going to play a big role. And it's just going to take work and time. But like you said, I mean, the larger second order effects could be pretty big. Mm-hmm. Let's see. Anything else to say about that? I think that was kind of the major points. We could also talk about this little company called Microstrategy. Travis, why don't you explain to the folks what Microstrategy recently did with their debt offering?
Yeah, super interesting. So Microstrategy is taking on some senior secured debt, about $500 million worth. And what's significant about this, so they've already taken out convertible debt over the past year or two and used those proceeds to buy Bitcoin. They own 92,000 Bitcoin roughly before this recent debt offering that they're doing this week. But this week's debt offering is a little bit different because, one, the debt is not convertible. It's senior secured, true debt. It's due, I think, in 2027 or 2028. It comes with about a 6.125% interest rate that MicroStrategy is going to have to pay on annual interest, and they're still going to use it to buy Bitcoin. But what's interesting is this is starting to put the company in a position where it really is positioning the company as a massive bet on Bitcoin. MicroStrategy historically was a software business. They did business intelligence software, and that business is a pretty good business, although they've lost market share to some of the other players like Looker and Tableau that have been a little bit more innovative in the last decade. But MicroStrategy itself throws off about $75 million of cash flow a year. It was valued around $1.5 billion or so market cap, didn't move a whole lot prior to them getting into Bitcoin. And so you could put a decent amount of debt on that, and that's what they did with the converts last year. They raised, I think, $1.7 billion of debt last year, and the core business can really, even if Bitcoin went to like zero, the core business could sustain that interest and that debt for the most part. But now you're starting to add more debt on. You're starting to add debt that is secured by the assets of the company. And they really are getting to a point where they really are leveraging up the balance sheet in a way that is going to either ensure that MicroStrategy ends up being worth a lot if Bitcoin goes up a lot, or the stock could be a zero.
Zero or hero.
Yeah.
And the stock could actually go to zero because the debt holders could be, not made whole if Bitcoin goes to a low enough price and stays there.
This could be like a systemic risk to Bitcoin as well, right?
Yes.
Yeah. How do you think about that? Like, what's the bear case here? What does that look like?
Yeah, I mean, for sure, there's similar to how we've seen death spirals in certain stocks in the market, or forced selling and liquidations during things like the financial crisis or during COVID period, right? If you had MicroStrategy, now granted, this is a ways out. A lot of this debt, including the convertible debt, doesn't come due until later in the decade. So they're not going to be forced to sell Bitcoin, say this month or next year if it goes down. But at some point, if Bitcoin remained, below, say, like 20K for a prolonged period in the mid 2020s, they could be facing a situation where the amount of debt they have is not covered by the value of the Bitcoin and not covered by the value of the actual software business. So in that case, you could have them needing to sell to try to recover as much as they can for the bondholders. And that would just lead to probably a lot of forced selling once the market sees that they're having to force liquidate.
Yeah.
So
I noticed their bonds. I think Colin wrote that their bonds are trading at like 60 cents on the dollar or something like that.
Yeah.
Did I read that right? There it is.
Yeah, but it's tricky because and these are the converts that are unsecured. So that is, I mean, it's tricky because you have this new debt is secured by the assets of the company.
That makes it a bit riskier for them because they could essentially lose everything that they have.
Yeah. So I put together some modeling scenarios in a spreadsheet that I'm going to be sharing, at least with our community and maybe broadly as well. But basically, if you assume a certain Bitcoin price, you assume some assumptions about the core software business, whether it's going to grow or not, and you can see that at certain prices, MicroStrategy stock is worth zero. And at certain prices of Bitcoin, say above 50K, you could make a case that MicroStrategy stock should be worth $1,000 a share or more. So it's essentially what they've done is they've levered up the balance sheet and made this big bet on Bitcoin. And it's become a very, very large, overwhelming driver of the value of the company.
It's become the Bitcoin ETF
Yeah.
that we don't have, essentially.
I respect the conviction. I mean, this is how you make billions of dollars, is you take massive bets.
I mean, this is, I don't know. I struggle with it a little bit.
In what way?
I mean, like you said, it's just such a zero or hero situation. I guess if Bitcoin doesn't, go too much higher from here and Bitcoin just kind of stays stable or whatever, then they'll probably be okay, especially if they work on their core business and make sure their core business can support their debt.
Which, do you think he even gives a shit about his core business
I don't
anymore?
think he does, to be honest.
I really don't.
I listened to him at the Bitcoin conference
Yeah.
in Miami. Was it a crypto or a Bitcoin conference?
Bitcoin.
Bitcoin. Okay. And yeah, he just straight up sounded, I haven't really listened to him very often. He just sounded like a maximalist. He's just all in Bitcoin.
Yeah.
And if you're going to be buying MicroStrategy stock, you've got to feel the same way. And you have to understand the risks of that.
Yeah.
Because, like Travis said, anything can happen. And if the price of Bitcoin does have a lot of volatility lower, then the stock could be worthless.
Is there really a rational reason to even own MicroStrategy's stock right now?
Right now, based on my numbers, I think the stock should be worth just under $400 a share, and it's trading just over $500. So if you think about this as like a Bitcoin proxy, you're paying a pretty big premium right now over what I consider the current net asset value of MicroStrategy. Now, if you believe the software part of the business is going to grow a lot in the next 10 years, or you are putting in, 50 to 100K Bitcoin prices in your model, then you could make a case for buying at 500. But as it stands today, the net asset value that I calculate is around, actually just sub 400 a share. So I don't like it as a pure Bitcoin play at $500 a share today. I would rather just play Bitcoin directly or play. Is Grayscale at a discount to NAV now?
I think it is.
Yeah, I think it is. So something like that might even make more sense if you're trying to make a big bet on Bitcoin. Now, you do have the advantage here. There's some leverage. Like this is essentially like a 1.5 to 2 times levered version of Bitcoin.
Right.
So
True.
You do get a little bit more upside if Bitcoin goes up significantly here.
What's also interesting, and I don't know if the short ratio is accurate here, I'd have to look, but it looks like it's pretty high, the short interest.
It is, yeah, it is.
So
what is it today?
It looks like it's around 20%,
Okay.
which is considered high. Anything over 20%, 20% or more is high. So this could also end up becoming like a Wall Street Bets attack and squeezing in addition to Bitcoin going up. Like if that all happens at one time, this could be an explosion.
Yeah.
Potentially.
Which, in the US, it's becoming more and more difficult to get access to leverage in the crypto market.
Yeah.
This week, actually, I've got so
They're
many.
saying 10 million or
I've
more,
got
right?
so many damn tabs open. Let me try to find this. Yeah. So Kraken, when did they put this out? It was this week, either today or a couple days ago, I think, to basically have access to margin trading. You are going to have to, I believe, self-certify that you have over 10 million bucks investable. So yeah, I don't know. Things are just getting weird on that front. And also now you've got the CFTC commissioner saying that, DeFi derivatives might be illegal, right? So I don't know. On one front, we've got all these positive developments around the world. And then in the US, it's like they're just trying to put the stranglehold. Look, I get it. We don't want scams. We don't want people getting over levered and blowing up. But there's a fine line between protecting investors and putting a stranglehold on innovation and giving people access to markets. And I don't know. Every month that goes by, I get a little less optimistic about the environment here in the US. What do you guys think?
I think it's puts and takes. I think that if we want mass adoption and we want ETF and we want all of these things, there's going to have to be some regulation. I mean, whether they're taking it to an extreme and they're going too far, the pendulum's swinging this way, then that's one thing. But I think overall, more regulation and keeping investors safe is what's going to keep Bitcoin and crypto around.
Yeah, I agree. Bruce Fenton talks about this a lot. He's a regulated something now. Anyway, so yes, we can't have these meme coin pump and dump Ponzi scheme scams running rampant, right? Like that's not good for the crypto community or Bitcoin adoption in general, right? But whenever you start to take leverage away and you start to just say really vague things like, these innovative markets might be illegal and, we're going to slap you retroactively. I don't know, it just makes it harder. And I think that's why we've seen some capital flight and talent flight outside of the US.
Yeah, that makes sense.
And I just don't want that to continue.
I haven't had a chance to dig into the Kraken stuff, but it's really surprising. I mean, I would think they could just tamper down the amount of leverage that they would be willing to lend to clients, similar to like how stock brokerages will do. In fact, brokers like Interactive Brokers will dynamically adjust margin on a day-to-day basis depending on the underlying asset.
Yeah.
And the most leverage that you're typically allowed is like 1.5 to 2x for like stocks, for instance, in most US brokers. So I don't know why Kraken couldn't do something similar. I'd have to look into the details of this, but it looks like it's some sort of legal requirement that they feel that they need to meet.
Yeah.
That is forcing them to only extend margin to those with over 10 million of assets, which is going to exclude a lot of people. So it's strange to me. I don't know why they wouldn't at least allow some modest level of leverage for clients.
That's just Kraken though, right?
Yeah, but I mean, just in general in the US, there aren't many great options for leverage. And, the exchanges like BitMEX that were kind of illegally, or not kind of, were illegally servicing U.S. traders. Like, obviously, the government is going to be very aggressive against stuff like that. So we just need more clarity. We just need more, like, and there are crypto-friendly people in the regulatory bodies, but there's just so much vagueness to everything that even with what we do, I'm like, okay, you know, where's the line? It's so gray, and I think they do that intentionally so they can, you know, go after who they want to go. I don't know.
They do.
Yeah. So
does the damn IRS.
Yep.
yeah, talking about unfriendly countries. So there are some other areas of China that have also been having crackdowns on mining. I think this is such a positive development. We need to get a lot of that hashing power out of China anyway. And you know, it's so funny when prices in Bitcoin and crypto in general start to come down, the FUD machine kicks into high gear. You know, from everything from this week it was the FBI hacked Bitcoin. No, they didn't. China is banning Bitcoin, so it's going to die. No, it's not. You know, like there's all these FUD things. Oh, it's bad for the environment. Actually, no, it's not. You know, but when prices are coming down, it's just like FUD just feeds on that negativity and it spreads so quickly.
I mean, that's the same thing in the stock market too. I mean, that's just all around.
Yeah.
Like, it's just how it goes in the markets.
True.
When
People's
things
sentiment
go down,
turns bearish.
everybody's doomsday, everything's dying, everything sucks, you know.
Yeah.
You just have to learn how to sift through all the noise.
Yep. Yeah, and when the markets hit peak, just, you know, capitulation, just, oh my God, the world is coming to an end, Bitcoin's dead. The Bitcoin obituaries start getting printed more often. That's usually how you know you're closer to a bottom.
Yeah.
True.
And when you have celebrities getting paid to endorse scam coins, that's how you know you're at a top.
Yeah. Learn the signs, people.
Exactly. So let's talk about the hack. What happened? So, you know, there was the Colonial Pipeline that paid Bitcoin ransom. What was it, $3 or $4 million? And the FBI was able to recover, I think, like 80 or 90% of that. And a lot of people were like, "Oh my God, they hacked the Bitcoin network. How did they get the private keys?" From what I understand, they were either hosting the private keys on a VPS, a virtual private server that was not controlled by them. Like it was a company and they subpoenaed the company and actually got access to the wallet or the keys or something. They didn't actually hack the Bitcoin ledger. Like that's one thing that a lot of people need to fully understand, because when you hear that, you know, the average person just, their fear kicks in and goes, "Oh my God, Bitcoin's going to go to zero now. Let me sell before everybody else." Well, you just sold the low, right? That's usually how it works. So I don't know.
I saw a few people saying, "Oh, they've got a quantum computer," and I'm like, you know, if they had a quantum computer capable of cracking, what is it, RSA 2048 or whatever, or RSA, was it 256? I forget the whatever the cryptography standard they use for Bitcoin, but it's like basically unbreakable.
Yeah.
With, you know, any amount of computing power we have on Earth today. So I saw some people saying, "Oh, they've got access to a, you know, CIA or FBI have a quantum computer." I'm like, you know, if they had a quantum computer that was that powerful, they wouldn't be using it to retrieve $4 million.
Exactly.
They wouldn't be tipping their hand for this tiny amount of money relative to
Touche.
what they could use it for.
Yeah. I do think it's good that they are getting more aggressive against ransomware, because this is obviously proving to be a really big problem. And yeah, I mean, I don't have the answers to how to fix it, but I know what's not the answer is to blame Bitcoin for ransomware, because I think we talked about this last week.
About this.
Yeah, ransomware was around way before Bitcoin was in existence.
Yeah.
So.
They find ways no matter what.
Exactly. All right, let's keep going. We've got a lot of stuff, I guess, like just in the macro environment, the stock market, some random news. Nikki, what is this chart?
Well, if you zoom in like on the 5-day, you can kind of see the cross between, or maybe it was the 1 month. Basically, growth stocks are starting to come back. They're starting to be alive again, a little bit. And value is starting to kind of sell off a little bit. This is just very short term, like over the past, you know, week or so, few weeks. So, you know, I know that for a while, growth stocks were kind of left for dead, and people were not wanting to take on risks and buy high valuations and worried about inflation and all of the things. But the stock market is kind of in an interesting place right now, and everyone's trying to figure out, you know, tomorrow we have the inflation data printing, and everyone's like, oh, is the inflation going to be extremely high? Is it going to stick around or not? And I was talking to a few advisors, you know, because I'm trying to ask around, you know, to my network, because I know we talked last week about the inflation trade.
Yes.
How we're positioning going forward and what we think is going to happen. And I mentioned that I am more in the camp of inflation being shorter term, but we will see a more elevated level, you know, going forward. Maybe that 2 to 3% actually sticks around for a long while. But maybe the spike that we're seeing now, that'll probably continue. Tomorrow's print will probably be ugly. But still the market and, you know, even the bond market is just anticipating this to level off. And I'm starting to believe that I think that, like, I'm there. So
you're saying you're expecting not crazy inflation and not deflation?
I'm expecting the print tomorrow to be nasty.
Yeah.
But I do think that it's going to level back, and then we're going to kind of be at this more elevated rate of inflation going forward than we have been in the prior decade or two, right? But it's going to still be elevated, just, you know, but not crazy. We're not going to see like runaway hyperinflation for the next decade.
Okay.
At least that's my...
So you're in like the base case, like kind of moderate inflation camp right now?
I think so.
Okay.
I think so.
Trav, what about you? Have you had a change of heart since last week?
Yeah, actually, it's worth mentioning. There was something that happened in the past week that is a little bit bearish for the inflation view, which is the Biden administration is having difficulty getting their infrastructure plan.
They're pulling back.
Yep. So the negotiations with the Republicans broke down. The moderate Democrats like Manchin are not agreeing to pass these more aggressive fiscal stimulus packages that the Biden administration wants. So it looks like those big eye-popping, you know, infrastructure packages that Biden was proposing a month ago are going to be very difficult to get done unless something changes. So that argues if the fiscal spending starts to really taper off over the next year, and then you have the midterms, which the Republicans could take some seats and maybe even make it harder for Democrats. If that all plays out without the big fiscal deficits that we've been anticipating, obviously we had the big fiscal deficits last year, but if those deficits shrink and we don't get the big deficits that we were thinking we might continue to get, that's going to put some deflationary pressure. And it's going to offset what we're seeing with the inflation right now. So that's something on a longer term or maybe medium term basis that I think is a counterpoint to what I was talking about last week, which is saying, you know, I'm more pro bias for a higher level of inflation.
The other thing that Biden is starting to pull back on is the tax changes. He's starting to pull back on the capital gains tax. He's starting to pull back on the corporate tax. So it's interesting to kind of watch it all unfold, and a lot of the people that I'm speaking to kind of in the money management space, they're saying there's no way that this stuff gets passed. Like it's too extreme. It's too complicated. Some of the policies they're trying to pass are just, you know, the point was to simplify the tax code, and they're going in and they are going to make it so much more complex. It's not even funny.
Will it ever get more simplified, or is it like one of these things where over time it just is going to get worse and worse?
It seems to get worse and worse. Seems like there's always talk from politicians about simplifying, but when it actually comes down to it, simplification never happens. There's too many lobbying groups for all these other deductions and tax loopholes. I
will say that the 2017 Tax Cut and Jobs Act simplified some things. But yeah, what Biden is proposing to do would just make all of our lives a living hell.
Okay, well, I want to take it to the audience. What do you guys think is going to happen over the next, I don't know, say 3 to 5 years? Are we going to have high inflation, base case inflation, or deflation?
Good
Kind of
poll.
curious what
Good
you guys
poll.
think. Let's see if there's a consensus there. So just type it into chat, and we'll see if we can make sense of the chat, which is
Well,
usually hard to do.
What's funny, I respect Colin a lot. And Colin Roche wrote that article today, the 3 things that I think. And he's been spot on about inflation for a while. And I read what he said, and it was exactly what I said last week about, higher base inflation, but it's going to kind of be transitory as far as the high spikes.
Yeah.
So I'm not saying like, it's just nice to see someone that I respect like that kind of have that same opinion. So I feel kind of on track a little bit. I don't feel that crazy, so to speak, because right now it feels crazy to say we're not going to have inflation that lasts for a long time.
Yeah.
It's almost like that's the black sheep viewpoint, so to speak.
Your base case of 3 to 4% inflation, though, is the scenario that I think, like last week, as much as we were talking about inflation last week and how I have a kind of a pro-inflationary bias, I think, over the medium term, I certainly don't believe we're set up for a hyperinflationary environment, but I think a 4% inflation environment, like on a consistent basis beyond 2021, would be absolutely game changing. And
Yeah.
it would align with what we were talking about last week, where it's going to have a 4% consistent inflation rate would have significant implications for bonds and stocks in particular, and probably commodities and stuff like gold and Bitcoin as well. So I think 3 to 4% inflation, which would be well above the Fed's 2% target, would actually be very, very bearish for bonds and very bearish for like very, very highly valued stocks. And so if that plays out, as moderate as 3 to 4% inflation sounds, that's actually huge if it were to play out that way.
Yeah, I was actually thinking more 2 to 3%,
Yeah.
but I guess Colin is calling for 3 to 4%. But I was
Yeah.
thinking that 2 to 3% mark. But I agree, 4%, like that's the high end for sure.
Yeah, we got to get Colin on the show. So for anybody that doesn't know, Colin Roach, he wrote the book Pragmatic Capitalism. I don't always agree with all of his views, but he's a super smart guy. And I always like people that I feel like are smart that I don't agree with, because I like to challenge my own ideas. So, and I mean, he is right about a lot of things. I think our view on money and, I don't know. You guys can go read it. We'll link it up in the show notes. But
Typically, inflation's been running, over the past decade under 2%, give or take.
Yep. They've been missing their target.
They've been missing their target. So what I'm saying is I think they're going to hit their target, maybe plus some a little bit.
Okay.
I also think that a lot of these wage increases are going to stick around. And, and I don't think they're going to end up decreasing wages again.
No,
And
wage increases are sticky.
yeah. So, like, there are a few other things. And then if they do keep tax rates lower, obviously that helps get money flowing through the economy. So I think that's where I'm at with it.
yeah.
I think fiscal is what we need to watch. What the developments on the fiscal spending front in the next year will probably be the most important driver of what happens in terms of the rate of inflation in the near term. So that's something that we need to keep an eye on. And right now, it's not looking like super optimistic in terms of large fiscal packages. So
to put that full circle in terms of, taking on risk in stocks, I don't think that I'm in the camp of like avoiding getting in equities and avoiding continuing my allocation there. And I'm looking at growth stocks at a reasonable value still and things like that.
So we actually got a question from C3 that said, since everyone is so scared about inflation, the contrarian trade would be to go full into risk assets.
That's just what I said.
Yeah.
That's why I think maybe growth is starting to come back in favor and we're starting to see those stocks move again. Granted, there's still some crazy valuations out there, so be careful. But I would guess that the stock market, it's been tapping on all-time highs. It's been trying to get through all-time highs. I wouldn't be surprised one bit if it eventually did it, especially after this inflation print tomorrow and people's take on the risk in equities still.
yeah, tomorrow's going to be really interesting. Actually, the next 2 to 3 weeks in in equity markets are going to be fascinating and potentially could dictate how the rest of the summer and maybe even fall goes. Because so obviously tomorrow we get the big May CPI, consumer price index number for May tomorrow. That's going to be a big deal. We have a Fed meeting next week. And there's obviously going to be a lot of people parsing what the Fed does next week, not only with rates, but also because they're probably not going to move rates. But what they may do is they may start tapering asset purchases, QE. They may start tapering down QE. They may raise the interest on excess reserves. They may do something to address this reverse repo issue. So there's a lot that's going to happen, I think, at next week's Fed meeting and in tomorrow's CPI number that are going to be really interesting to watch how the markets react.
Yeah, Trav, there's a Wall Street Journal article here talking about like the banks and, you know, how they're just flooded with deposits. It's creating this really weird situation. Do you want to explain to everybody what the hell is going on over there?
Yes, let's talk about this. This is a really interesting topic.
More money, more problems.
Hey.
Yeah.
Wait, before we do that, which by the way, I was reading through the comments and I didn't really get a sense of, I saw some deflation, some inflation, some people saying, you know, nothing's really going to change. So I don't know. It feels like a split decision even in the chat. So
interesting.
So anyway, okay, Trav, back to you. Let's talk about the banks and how it seems like the opposite problem of the '08 crisis where they were over-levered and undercapitalized. And now they have too many deposits?
Yes. So banks are flush with deposits right now. So from everything from like, you know, consumer saving rate, which went up a lot in the last, 12 months because of COVID. And
who could have possibly guessed if you print $5 trillion, some of it's going to end up in the banks?
Yep, all the stimulus money, all the money for a state and local has been getting pumped out from the Treasury into their bank accounts.
Corporations raising debt.
Yeah, so lots and lots of cash and higher savings rate is creating massive amounts of liquidity, massive amounts of deposits that are basically just being stuck on bank balance sheets. So JP Morgan, Bank of America, the big banks that you think of have seen a massive increase in their deposits. Now, you think of deposits as like a good thing, but for a bank, they're actually a liability. So a bank, their assets are the loans that they make and earn interest on, but their liabilities are the deposits because people put those deposits in the bank and the bank has got to either pay a little bit of interest or obviously create a liability for those deposits. But anyway, long story short, a bank having too many deposits means a bank has a large growing amount of deposits on the liability side of their balance sheet. And banks, ever since the great financial crisis, there's all these new regulations and they're trying to maintain higher capital ratios. They're trying to maintain, high levels of equity to assets and, high levels of assets to liabilities. And so when you have this massive deposit liability growing on their balance sheet and they're not making as many loans, they have a problem. So they need to go somewhere with all these deposits that they have, and they've been parking them in the money market funds. And money market funds themselves are now flush with way too much cash with not enough places to invest it. There's just not enough treasuries out there for them to, or at least short-term treasuries for them to invest it at a positive return. And so now money markets are using the Fed's reverse repo facility, which is essentially a way for these money market funds to park a bunch of their excess cash that they don't have a place to put it other than the Fed to earn a little bit of interest overnight.
And it looks like the reverse repo numbers are at a new all-time high recently, right?
Yep.
Is that what this chart is?
Yep, exactly. So the reverse repo facility went from more or less zero 2 years ago to now doing $500 billion a day. Last night, I think it was like $503 billion. It was like a multi-year record in terms of the amount of money being parked at the Fed overnight. Some people have started these conspiracy theories that some people just don't understand how it works. A lot of people think this is the Fed pumping money into the system. It's actually the opposite. It's actually the Fed taking deposits and giving treasury collateral. Mm-hmm. So the Fed is buying long-term treasuries. That's QE as we know it. But on the short term, they're actually trying to give the money market funds treasuries so they can earn a little bit of interest on these overnights, and they're taking the liquidity out of the system. So interestingly, this is not, you shouldn't think of this massive increase in reverse repo as the Fed pumping money in. It's actually the Fed taking money out. And that could have some shorter term implications on the market. But I wouldn't freak out too much about this because this should wane over time. We'll probably hit a peak in like mid-June, and then this should start to wane over time as corporations start to spend this money, consumers start to spend this money in the real economy again, and these balances get worked down over time. So not something to freak out too much over, I don't think. It could have, like I said, some shorter term impacts. Whenever the Fed is removing liquidity from the banking system, there can be shorter term impacts on things like stocks or bonds, but it's not a situation where I think like there's, it's causing GME short squeezes or it's causing, a massive market crash. I don't think that's what you need to read into this.
Just something to keep your eye on. And could there be any systemic problem with it, or
potentially? But I think that's why the Fed at their meeting next week will probably try to address some of this issue. And there's the tools that the Fed has to maybe help rectify the situation where banks just have too much liquidity and no place to go with it.
Gotcha.
The one thing they could do is they could just stop their QE programs in the short run. They could stop buying all the bonds up, especially on the medium and long term, and so that there are more treasuries available for these banks to invest in to earn interest. But this could also, by the way, I should say this. I don't know if this is actually true or not, but it is possible that all this extra liquidity that's in the banking system is the reason that the 10-year bonds are actually still trading at a flat, pretty flat yields, and trading below the rate of inflation, because banks have nowhere else to go to park their excess reserves, and so they may be moving out on the curve and buying bonds. By buying all these 10-year bonds, it's lowering the interest rate that's out there.
I was wondering, what is going on with yields?
Why? Who's buying bonds at a 1.5% yield?
Right?
If you believe the Fed is going to at least get to 2% inflation, right? Then you're losing. You're at a negative real rate, right? So that's why it's confounding to look at the 10-year and say that the bond market doesn't seem to be worried about inflation at all.
That's how we're reading it.
Yeah,
but
it could
there
just
could
be
this underlying issue that's actually causing the decline in yields.
Yeah, and so what could happen too here is later in the summer, if this liquidity problem starts to work itself out and the banks start to have less reserves, then you could have less bank buying of treasuries potentially, if this is what's happening, and then rates could actually start to rise again. So there's a theory here that potentially we could see the 10-year and 30-year rates rise again in kind of mid to late summer as the high CPI numbers come out and as these like shorter term liquidity issues start to like get worked off. I don't know. That's just a theory.
Yeah. That makes sense.
I mean, 10-year yields should be at 2%.
10-year yields should be reacting to the inflation trade.
Yeah.
The potential for rates to go up because of it. I mean, that's what I would be thinking.
Yeah.
And then in turn, I would think equities would maybe be selling off a little bit with inflation expectations.
Yeah.
It's just very strange.
Yeah.
so buy Bitcoin?
Bitcoin fixes this.
Bitcoin, I don't know if it fixes that, but it's another solution to it. Great comments, guys. I appreciate it. I just kind of sit back and listen to you guys yammer about bonds because I really don't know too much about them.
I don't know too much about them.
I mean, I'll be honest, there's still a lot about the repo market I definitely don't understand.
What's funny about that is like in the beginning of the crisis, it was that the repo market was like slammed, like the Fed couldn't lend out enough money, and now they can't take enough money. It's like they have to. It's just the tables just turn. It's just so funny how everything is turned out after all of this stimulus money and just these companies having to be flush with cash, taking on debt to have it on their balance sheet, and then people don't want to take out loans, and that's why the banks are struggling, because I guess that's one way for them to be able to make money on those huge deposits that they have, but there's not enough demand for loans.
Right.
Yep.
So it's like the whole system is crumbling because the system depends on people taking on debt.
Yeah.
You know?
Well, mortgages have definitely been going up, and talking about whipsawing markets and mortgages, let's talk about lumber. It's it's down over the past couple of weeks. This is the weekly chart, down about 35% off the all-time highs, which is expected, right? It went parabolic, had a huge breakout of a multi-decade range. You know, lumber's been trading historically in between like 250 and 500 bucks. And then with COVID and all the demand and the supply chain issues, went all the way up to a high, about 17, almost 1800 bucks. And then is finally starting to pull back. And, you know, we talked at length about the real estate market last week. One thing that I actually missed, I'm like 2 weeks late on this, but the CEO, I think he's the CEO of Redfin. Yep. He went on this tweet storm just pointing out all the weird situations in the real estate market, from the demand side to the supply chain issues. And there were a few things that I thought were just really strange in here and really telling. Obviously, the lumber prices being up 300%. But also, like, look at this. 63% of buyers have bid on a home that they didn't even see in person.
I know people personally that have been buying homes in this market they haven't seen.
Yeah.
That's nuts.
And then here in Central Texas, there was an article that said, what was it, like over 1,500 homes over the past year have sold for over 100,000 over asking.
Crazy.
Right? It's just the strangest situation.
You know, to take this point back to the banks, do you think that maybe this is affecting the banks big time because not as many people are able to buy homes and take out mortgages, and then the banks can't lend because there's not enough housing? And like, I've thought about that, but I don't know. I don't know how much of it matters there.
Yeah.
So,
But you'd think that there would be more lending on that end, but they can't because there's no homes.
yeah, I mean, look, if you look at refis have recently just hit a new all-time high. So refinance basically volume just is challenging the all-time high from the early 2000s. And then purchase mortgage originations are back at, you know, pre-2008 levels. So there's a shit ton of mortgages being originated
so they are
right now.
originating.
Yeah,
Okay.
Yeah,
absolutely.
The housing market is on fire, but you know, I bet if you looked at the total amount of U.S. mortgage originations as, you know, relative to the savings rate or the money supply or something like that, it's probably not keeping up. Like again, if you look at the bank's balance sheets, the asset side is growing at a pretty nice clip, but the liability side may be growing faster. Like there may be more deposits being put into banks, at least in the near term, than they can lend out.
So
like
it's
you
just
said,
too much cash.
Yeah.
Just too much.
it's just relative rates, right? So like both sides may be rising, but the liability side may just be rising faster.
Got it. Yeah.
At least in the short run. I would expect that over time, especially if the economy remains solid, on solid footing, like all this money is going to get spent in the actual economy, or not all of it, but you know, a good portion of it. Companies will start doing more M&A. There'll be more CapEx being spent now that we've reopened.
More SPACs.
Yeah.
All the consumer spending, certainly, I think we're seeing it already.
The
quite a bit.
savings rate is starting to decline again.
Yeah.
And
Right.
it's still elevated above pre-COVID. So eventually that'll come down and normalize.
Well, people
Yeah.
need to start spending money on travel again and goodies.
Yeah.
Yeah. Let's do some Q&A, guys. We've been going for about an hour. Let's see what questions
Hey,
you guys
give
have.
Eric Gomez a shout out. It's his birthday.
What's up, Eric Gomez?
Happy
And
birthday.
he's
Happy
been
birthday, man.
following
Thanks for
you.
following us for so long. Yeah,
Heck
we've been
yeah.
doing this a long time, I guess.
Yeah, you have for sure.
All right. Let's see. C3 says, due to the supply chain bullwhip effect, the current high demand will lead to an opposing effect, deflationary, due to stockpiling and double ordering. Yeah, I don't know. There's so many different strings that you pull in the whole inflation deflation debate. All I know is Bitcoin is hard money, and I want to own some of that.
Oh,
Buy Bitcoin.
I have a question.
Did I say that already, by the way?
Yeah, you did.
Yeah.
I have a question. Okay. Was the Bitcoin conference good or bad for Bitcoin?
Let me put it this way. I felt bad.
Particularly the streaking doger.
Yeah, I didn't say this publicly, but I guess I'll say it now. There's a reason I haven't been to a crypto conference since 2017 or 2018. there's a lot of cringe, but with that said, there is a lot of excitement. There's a lot of connections that are made. There's a lot of positive developments, but there's also a whole load of bullshit.
Oh, yeah.
So I don't know. I mean, yeah, you get the crazy guys that'll streak, and you know, the chick that was yelling at Jack Dorsey, you know, stuff like that happens. But I actually prefer to go to crypto events in bear markets. Coming off of a bull market like we've had, I stay far away. It's after we've had like 6 to 12 months of bearish price action. That's when I want to go to crypto events, because all the get rich quick tourists have left.
Okay.
That's great, yeah.
I have another question, because I actually don't know the answer to this.
Yeah.
I like in the stock market, under 20% from the highs, you're in a bear market. What's the deal with Bitcoin specifically? Like, how long does it have to be under what percentage for you guys to be considered in a bear market?
So I have this great video on YouTube.
Oh,
it's all about the
this?
5 markets, the 5 phases of the crypto market cycle. No, I mean, look, there's all this talk right now about the death cross. Oh my God, the death cross in the moving averages, depending on what moving average you use. Let's go ahead and jump into the crypto chart.
Yeah, let's look at the chart, because I think
I know this is what everybody wants anyway. They're like, shut up about everything else and tell me what price is going to do.
Bitcoin is at an interesting point right now, I think.
It is. It's one of those things where, you know, like when you have price that's trading with conviction, moving averages are great. And I've got a ton of drawing tools on here, so let me just remove everything. But yeah, when price is trending up, moving averages are great. When you get below them, moving averages turn into resistance, and it's typically bearish pressure. But then you have periods like 2019 and 2020 where the market doesn't give a damn about moving averages, and it just chops through them until you start trading with conviction again, and then they start to matter. Where we are right now, we're obviously like 50% off of the highs, and we're below. So now moving averages are resistance. And yeah, if the 100 period comes down and crosses the 200 period, that's gonna, some people look at that as confirmation of a bear market. Yeah. Okay. It actually happened quicker than that, but I think moving averages alone are worthless. It's any single form of technical analysis or any form of fundamental analysis is worthless by itself. It's when you compare and combine everything: market sentiment, TA, FA, right? On-chain metrics, off-chain metrics, adoption numbers, global growth. You know, there's so much to look at that it's like a pizza, right? And you put it all together and it makes sense. So right now we're obviously below both moving averages. 40K is strong resistance. And we'll see what happens. This is why I haven't made any moves inside of this zone. You know, I actually expected multiple weeks of consolidation, and I don't try to trade when price is bouncing around inside of a tight range.
You're waiting for a break for confirmation from here, because basically if we don't hold 30K, we're probably going to 20.
Yep.
And we could still break down through 30K, no problem. But if we break out above, say, 40,000, that's kind of the key, the paying for the confirmation around 40.
Yeah, and the upside potential, by the way, isn't that great on a 40K breakout, because you've got 50K, which is real close, and there's a ton of supply sitting around there.
Yeah, there's a lot of resistance.
So the risk to reward on a breakout trade like that is really just kind of like 1-to-1.
But long term.
Yeah, long term. Yeah. Again, I think in 3 capital buckets. My first one is cold storage. I buy, accumulate long term when prices are in the depths of hellish bear markets. Number 2 is I swing trade, market trends, and then every now and then we get a day trade or a short term swing trade. But yeah, what I would love to see, and we talked about this last week, is if there was a fast washout down to 20K, I think that would be a solid dip buy opportunity for the way that I trade. If not, if we chop around and kind of slowly grind or just chop up and down, then I'm not going to make any big moves. My biggest move was literally selling the right shoulder of Bitcoin and then selling pretty much the top of Ethereum. I literally sold that day as price was going green to red. So
Ethereum is still in a bull trend, I'd say.
Ethereum is interesting, and I saw a question earlier that I wasn't able to get to about, you know, well, what do you think about like over allocating to Ethereum versus Bitcoin? I'm not going to get into the tribal debates, but just looking at the chart, as of right now, Ethereum is above both moving averages, pulled back to retest a major area of what was resistance, turned support, and the moving averages are up. So the market structure is actually fairly different between Bitcoin and Ethereum right now.
Is this the start of the flippening?
Oh my God, the flippening. I have no idea. I own both. I'm not going to try to guess the winner long term. I just allocate to the ones that I think have potential.
Come on,
Yeah.
Bitcoin definitely was due.
Yeah.
So.
Market sentiment just got crazy.
Yeah.
There was nothing on the chart, and there was nothing on the on-chain data that was saying that Bitcoin was the top at 60K. It was market sentiment. It was people got too damn cocky. Everybody was long. The market needed to punish everybody.
Yeah.
Now we've done that. Now the next question is, okay, do we need an extended bear market, or are we going to V-bottom bounce? And is the DJ going to turn the music back on again?
Man, we didn't even talk about the meme stocks.
Meme stocks, meme cryptos. Yeah. What's up with AMC today?
It's selling off.
Okay. Huge breakout. What's up with GME? I know Kev's been watching that like a hawk.
GME had earnings today. And,
today they just had them?
it was selling off at the close.
Yeah, after
when
hours it
earnings
looks like it's down.
But
let's do some Q&A.
Yeah, I don't think short-term fundamentals are going to be doing GME any favors.
But they hired the CFO from Amazon.
That's going to take some time. If that turnaround's truly going to work, it's going to take at least a few quarters, if not a few years, for the actual financials to show it. And in the meantime, the stock is ping-ponging around based on market sentiment and whatever Wall Street Bets wants to do that week.
Yeah.
Yeah, Wall Street Bets has been active again. Pretty crazy.
We've had some really nice winners this past week in a couple of stocks that actually caught some wind. Yeah. Wish, Root, which I talked about I think on a stream in the last couple of weeks. And
which one was it? Sorry, I was reading.
Also, Wish, Context Logic, Wish,
okay.
otherwise known as Wish. This is an e-commerce business that is pretty interesting. And there's some interesting dynamics. I actually own some stock for a longer term play on this, but the stock spiked like 50% the other day.
Oh, wow.
And,
were you buying down here?
Yeah. I was a little early on my first lot, but then I was buying in the like single digits, and I think around like $8. And the thing went up to like 17 pre-market. Was it today or yesterday?
Had a big gap in crap. Yeah, look at that.
And it's come back down to earth, but still well above where it was trading prior to the meme stonk run. So yeah, it's a fairly low float, relatively high short interest, although I think the short interest numbers were being misreported. It's not as high as some people were saying it was, but interesting dynamic. Really, really strong board here. Really interesting longer term opportunity, facing some headwinds in the near term in terms of growth rate because of the COVID impact. But there's puts and takes on this one, but this is kind of a poster child this week for what's been happening in some of these meme stocks. People chasing kind of like what we saw in February. A lot of people are chasing plays where there's either a thin float, maybe combined with a high short interest level, maybe a stock that's beaten up. And so, there's been Root is another one, Root Insurance. That company IPO'd in the 20s and has traded down to like a single digit stock price, but then the last couple of trading sessions was up a lot. And that's one we flagged to our community, the Skill Incubator community this past week. I know a couple of our members took some really phenomenal trades.
Nice.
I think a couple of them even had some options trades on it that are up like 1,000%.
That's awesome.
I had a small amount of options in it that have done well, but
it's funny though, because a lot of I look at like Wendy's,
that was a funny
Wendy's
one.
went lit for
Wendy's
whatever
went up 30%
reason.
What's their ticker?
because of tendies.
WEN. Because of what?
Because of tendies.
What? Wait, what?
Yeah, I mean the whole thing about this was a kind of a joke, like a meme thing based on Wall Street Bets.
Chicken tenders?
Yeah, tendies.
Look at that. Look at the multi-year resistance area
does
too.
Does Wendy's have like a tendies on the menu or something?
Well, yeah. I mean, actually, that's a good question.
Like, did they put on the menu like something named tendies?
I saw Burger King was trolling Chick-fil-A.
Oh, were they?
They were, because Burger King was promoting their chicken sandwich, And for Pride Month, they were like, hey, and we're open on Sundays. And like, yeah, they were leaning hard into that, trolling them. Yeah.
Interesting.
So
yeah,
they're coming for
the
'em.
chicken sandwich wars.
Yikes.
That's it's gonna be hard to take down Chick-fil-A on taste, though. But you know, I like the marketing angle of that.
Yeah.
But no,
Yeah.
to your question, I know Wendy's has like their chicken sandwich, their spicy chicken sandwich. They've got nuggets, but do they have tenders now?
I don't know.
If you
I don't
know and you're in
Yeah,
chat,
if you guys know,
I
chat
want to
us
know
up.
why it went, like why this happened. I'm just curious at this point. But what I think is interesting with a lot of these meme stocks is it's all fun and games, but I do think people need to learn how to trade this stuff properly because, like, honestly, it's really hard. You probably need to be buying in advance and like swinging these names, like, you know, but understanding that if you're not trading them in the moment and comprehending how fast these things are running, you may end up bag holding.
Yeah.
You know, I'm worried about.
If you're waiting for a post to blow up on a subreddit and you know it's got 50,000 likes, you're probably buying somewhere near
You're
the high.
probably buying the high, and I don't know. I just think, like, if you're gonna try to play these meme stocks, get really good at your trade management.
Yeah.
You know, and your skill set.
Yeah. Okay, let's do some Q&A. Olgan was asking, can you get Crypto Hustle to appear on the show? Yeah, we're trying to get him out from his mountain home. You know, I feel like so many people have gotten like just locked into where they are because of COVID. Obviously, some places are more locked down still than others.
got to lure him from his cave.
Yes. Guys, I want to express my appreciation for your authenticity. Yep. Can you be more particular about inflation deflation proof stocks? Are you open about your portfolio? So yeah, I mean, we show our portfolios in the community, which we'll link up in the description. I don't know. Do you guys have any like specific inflation deflation plays in mind?
I mean, gold is a classic inflation play.
Yeah.
Bitcoin is a up and coming inflation play.
Yeah. We talked about
Hard
commodities.
assets, you know,
Yeah.
real estate, houses that you can go and knock on the door, you know.
Yep.
REITs, which are funds that basically hold real estate that
Yep.
you don't have to actually own or hold any physical real estate, because that can be a pain in the butt. What else?
Well, so we mentioned some funkier stuff too, like the PFIX ETF, which plays the interest rate derivatives market and can take advantage of volatility in bonds. PFIX ETF is kind of interesting. Individual stocks, I mean, you know, anything that is going to have strong pricing power that doesn't have to invest a lot of capital into fixed assets, because in a really inflationary environment, companies that have to plow back their cash flow into buying more and more expensive physical assets are going to be kind of behind the curve. Whereas companies like marketplaces or exchanges or, you know, credit card processors, someone who takes a percentage off the top, and if that top line is growing, you know, if it's
Their
inflating
percentage
over
grows.
time, even if at a fixed percentage, that their revenue will grow and grow and grow, and if they can contain their costs, then they should be able to generate, you know, pretty good revenue growth and returns. So you're looking for like asset light, pricing power, and again, I think businesses that would tend to meet that would be high margin software businesses, exchanges and marketplaces, any payment processors. Now, unfortunately, a lot of those businesses are expensive. Like think about like your PayPals of the world and your
Square.
Squares, you know, those are already kind of expensive stocks, so you have to be careful there. But you know, I think, you know, we had a couple of investments in some software businesses and marketplaces in the last 3 to 6 months that we've alerted our community about, that we felt were buying at fairly reasonable prices and multiples. And so I would look in those areas. And then, of course, you have like energy stocks, commodity stocks. I don't like those businesses as much, but if we do get heavy inflation, those tend to do well. But I'm not convinced that's the place I want to put a ton of my capital.
I do think I totally agree, like everything aside though, with the thesis about oil prices going up.
Yeah,
Like-
we did talk about that last week a lot.
Yep.
Structurally, there could be an issue longer term with there not being enough supply of crude oil now that you've got ESG activists pushing all the oil companies into like stopping production. And
Well, I think that even like Royal Dutch Shell, they were fighting with, I forgot which country it was, but they're essentially having to really pull back on their operations, and they're saying like, hey, this is gonna cause higher oil prices, like we're going to have to sell off, you know, assets, and we're gonna have to redo this business. And they straight up mentioned it. So I've heard more people talk about that theory after you brought it up. So it was funny. It was like, you know, once you see or hear something, it's like, oh, you recall it every time. And I'm like, this keeps coming up over and over again, and nobody's talking about it except these like very niche people that I'm listening to. It's very interesting.
Yeah, crude did hit 70 a barrel. It's kind of been hanging out around 70. So yeah, it's still been pretty strong. And I would tend to agree, especially on a medium to longer term time frame. I think you are right that there could be an upward bias in crude prices given the supply dynamics. But I would caution, like, that is a sector, obviously, over the last 5 or 10 years that's, you know, had its share of massive drawdowns, especially among energy companies that were highly leveraged. So you have to be careful with your picks in those sectors. You got to really focus on quality businesses that aren't like too over levered on their balance sheet, because, you know, oil can go from 70 to 40 in the short term like that. Even though if in the longer term we think crude prices will be over 100.
Yeah.
So that's really the
It's historically been volatile.
Yeah.
Here's a question kind of on that topic. Matthew is asking, any thoughts on rare earth mining stocks given the likely passage of U.S. legislation to prop up that industry as a defensive measure against China's near monopoly on it? Great question.
Yeah, there's only a couple of ways to play that. I know Chama's SPAC that took MP Materials public is one of those big ones that's domestically based in North America. Ticker symbol MP. Stock looks a bit expensive on current numbers. Like you have to believe that they're gonna really have no major issues ramping up their production there of their rare earth metal volumes, and that rare earth prices will stay up. It's a pretty high bar, honestly, given the current valuation of MP. So, you know, this is a tough one. I do like the thesis overall in terms of this being a strategically important asset for the country. Doesn't mean, though, that as a stockholder from these prices, you're necessarily gonna crush it. I do think they'll be able to get subsidies and things like that from the federal government, but it's not clear to me whether or not, you know, this is really a business that I'd want to own at these prices.
Makes sense. Hey, look, I've got an impersonator in the chat. Apparently, if you send me a message on WhatsApp, you can invest and I'll double your Bitcoin overnight.
Get the F out.
Yeah, let me remove that. Yeah, the moderation on social platforms from impersonators has not gotten any better. I don't know. I know we talked about this a few weeks ago, but it's like willful negligence at this point. Like, really, you can't tell that that's a fake person?
Yeah, and just to reiterate for everyone, none of us will ever private message you or ask you to send us money. We don't manage anyone else's money. So if you ever see anything like that, we don't trade for people. We don't manage people's money. We won't private message you about trading your capital or asking you to send us capital. So
not your financial advisor, you know.
We will not DM you saying hi, because that's what they do. They DM people and they say, hello, how are you? And,
how's your trading going?
How's your trading going? We don't do that.
If you send it to me, I'll double it for you overnight,
I just had
guaranteed.
a lady put in $300,000.
Yeah.
It's frustrating. I see that this problem is getting worse, and it's starting to expand to people that, you know, that are not even in the finance space. And I see it on Twitter every day now. People are saying they've got impersonators popping up. It's annoying.
It's very annoying. Yeah, well, I think, at least the good news nowadays is like so many other people, or I guess not good news, but the more people it happens to, the more people are aware of it. You know,
It's like
5
the
years ago, I'm
Nigerian
like,
prince.
holy shit, this is crazy. Like, I feel like I'm the only one having this issue because crypto, is the easily scammable area. So it's like, yeah, you send somebody money, you're not getting it back.
Yeah.
Yeah, they're getting everybody.
Yeah. Well, awesome. Let's go ahead and start to wrap it up. I know we've been going about an hour and a half. Just to kind of recap, looking at the markets, Bitcoin kind of in a holding pattern. in between support and resistance. Up pretty big today, obviously, on the El Salvador news, which I think is huge. You know, again, it's not perfect. It's a step in the right direction. And I look at this as, you know, kind of the domino effect of other countries. You know, Balaji again tweeted out Mexico, Colombia, Brazil, Argentina, Panama, Paraguay. You know, like it's going to be slow at first and then all at once, right? And then eventually, maybe, knock on wood, the EU, the US, Japan, Korea, you know, other major economies will follow suit. What?
That's wishful thinking.
Very wishful. Yeah. Well,
But I'll let you have it.
yeah, I'm going to hang on to it.
Hang on to it.
And then in the meantime, we're just going to, you know, mine Bitcoin with these volcanoes down in El Salvador.
I love
Yes.
that. I love that a lot. I think that's amazing. Does Iceland do that?
Yeah.
They,
yeah.
I mean, I know they have renewable mining.
Yeah,
But I didn't know
geothermal's
if they
huge up there.
used their volcanoes or if it was wind or whatever. But I guess it probably is
Yeah.
geothermal. Yeah.
So yeah, geothermal is huge there.
Yeah.
Blue Lagoon.
Oh, yeah.
Yeah. All right. What else? What's going on next week? What are we looking out for? Obviously, inflation numbers. Keep your eye on those.
We want to see if this damn stock market is going to correct or not.
I know it's literally so the S&P 500 is flat from a month ago.
I mean, look
Dead
at that.
flat.
Look at that price action.
I mean, it looks like it's squeezing.
it wants to collapse or moon.
Yeah.
Like it, one or the
Maybe we need a parabolic blow off top outside of this year-long channel that we've been in.
blow
you
off
know.
top.
Yeah.
Oh, okay.
I don't know. I mean, look, so we had the COVID panic. The Fed started pumping trillions. We had the rebound. And then we've basically just been in a slow grind, you know, for the entire past year. It hasn't gone parabolic. We haven't really had any meaningful dips. You know, talking about moving averages sitting above the 100 period for 1, 2, 3, like half a
For too
dozen
damn
touches.
long.
Yeah. Let's get a panic, would you?
No, I can see that. I can see a blow off top, a breakout, fake out breakout, sell off.
Okay.
That's
What do you think, Trav?
That's what I think.
What's going to happen
What's
over the
gonna
next couple
happen?
of weeks?
It'll either go up or it will go down.
Or it could
flat.
just stay flat and bore us all to death.
No, I mean, it's tough for me to call what the indices are going to do on a short-term basis. But, you know, I do think summer tends to be, like June, July tend to be a little bit lower volatility historically. And, yeah, I don't.
Sell in May and go away. That's
Yeah.
the thing, right?
We're
Yeah.
in June though now. Oh, but yeah. I guess you mean
Maybe May
they don't
comes
come back
before
in
June. Yes.
I do think there is a higher probability in the next probably 2 weeks of a move in either direction, given the CPI numbers coming out, maybe the reverse repo stuff reversing course at some point, the Fed meeting next week where we'll get more information about what their plan is over the next year. So those are some pretty key events just happening in the next week or two that could move the market.
Yep. Cool. Well, we'll keep our eye on that stuff. Anything else before we wrap it up?
Oh, we covered a lot of stuff today.
We
It
did.
was
I
fun.
feel like
did.
we didn't even get to it all.
Oh, no, never.
No,
Yeah.
we didn't.
We didn't.
But yeah, thanks for being here. If you're watching this live, also thanks to Y Charts for sponsoring the show, and thanks to our community at the Skill Incubator. You guys are amazing. If you want to join us, just go to skillincubator.com. Check us out there. And what else? Submit a question for the show. WeTalkMoney.com.
Yep.
Heck yeah.
You're doing great.
All right, I'm trying to remember anything else.
You're doing great.
Don't send money to scammers.
And
Get outside.
get
It's the summer.
outside.
There we go.
Yeah.
Yeah.
Yes.
I'm excited for more boat days.
Use sunscreen.
Yes.
Yes.
Got to protect the skin.
Protect
Cool.
the beautiful face.
I think we covered the important stuff.
All right.
All right. Well, thanks, guys. Thanks, Nikki and Travis. Thanks, Kevin, on the ones and twos in the background. We'll see you guys next week. Take
See
care.
ya.